tell us about the market for you right now, because there are certainly, obvious reactions to what happened over the weekend. There are fundamental things at play, right? China is always important when we think about metals. So tell us how you're trying to kind of weed through the market and what really matters longer term in terms of the trade.
Sure. So the short-term response is kind of this gut check, right? Which is just, what if we are entering a World War III and demand falls across the board, right? So you're seeing a lot of our coverage, fall off on the equity side. You're seeing uncertainty the market doesn't like, so that's been the gut, visceral, initial reaction. But if you really parse it down a little further, you see that, to your point, I think alumina is probably the most interesting to discuss of our coverage. We don't really do gold, but it's been interesting to see that actually hasn't gone up like one would expect in a period of uncertainty, because the U.S. dollar has strengthened. And that's another factor, right? Stronger dollar usually not good for commodities, so that's an overarching theme as well. But within aluminum, 9% of the world's aluminum supply comes from the Middle East, and not so much Iran. It's actually about, I want to say 18% of U.S. supply indeed comes from Bahrain and UAE. And I
don't think I had any idea about that.
No, I didn't either.
Yeah, no, and ultimately the market is efficient. It could come from elsewhere,
right? But
that's been the pattern. And if you look at the very latest that happened just a couple hours ago, is the Gutter smelter, which was about 650,000 tons. The Norsk Hydro smelter announced that they were going to be idling capacity over the period of March, and they said it would take 6 to 12 months to restart once they decide they can restart. So that amount is almost 1% of the global aluminum market, and it's not huge, but on the margins certainly moves the needle, right, when the market's already fairly tight. So that's the latest, and that's what's most compelling, I think, for the trade now.
So if I look at aluminum futures, up about 1.7% yesterday, up another 2% today, how much of that is that all of that factored in, that concern, the shutting down of the smelter? Like, how much of that, what does that price reflect? Is it just nervousness? Is it the reality that this could be a longer war? Like, what do you see in those numbers?
Well, again, when you compare it with copper and copper being down, I think if it weren't for the fact that the proportion of aluminum coming from the Middle East is so high, aluminum might otherwise have been down, right? Because of the stronger dollar and because of the concerns about demand, right? And actually, higher energy prices hurt aluminum, hurts all miners, right? But particularly hurts aluminum to the extent that aluminum historically has been correlated with oil prices. More importantly, electricity prices, because smelter costs, about a third of them come from electricity. So if it weren't for the disruption, aluminum would be down. So it's a pretty important swing factor.
Yeah.
And again, it's not like this is short-lived, right? It's going to take 6 to 12 months to restart, and you do it in an orderly fashion, and it's less disruptive. But there could be more, right? There could be Middle East also could see Saudi closures. You could see Bahrain closures. You could see UAE.
So if that's the view of aluminum, what about steel, copper, and iron ore out of the region? What are you seeing there?
Iran isn't huge in terms of steel, and so the Middle Eastern component for steel is not as material. I think on the margin, there's more concerns about costs and demand that balance off any concern over on the supply side. On copper, it's been weaker, like I mentioned, and I think it also has its own demand and supply issues. I think, if you consider freight prices going up, that would be marginally inflationary, but if you consider the broader U.S. dollar weakness, et cetera, that's an offset. I think copper's got its own dynamics of relatively short market, tight market conditions, but it tends to trade with gold and the U.S. dollar pretty closely.
I want to go to iron ore if we can, because we kind of started the year off pretty strong, and I think a lot of folks were kind of scratching their heads considering kind of a mismatch between market pricing and also conditions on the ground. And I think about China. I just want to look at some numbers here. Iron ore imports, hit a record last year. Steel output in 2025 was on course for a 7-year low. Is that right? That number? Yeah. I'm not sure if that's right.
That's roughly, yeah.
Yeah. So where are we now in the China dynamic in all of this?
So in terms of Chinese steel, the exports last year were another record high.
Yeah.
Even as the domestic consumption seems to be weaker. If you think about the critical components of steel consumption in China, you've got infrastructure, which is government driven.
Right.
But you've got the property sector, which makes zero sense.
Right.
We've been saying for a while the property sector has no business growing at all. The population is shrinking. They're closing kindergartens. Why would you need more? People already have multiple homes. Why do you need more, right? And the property values have been going down. So that's been a big headwind.
So how do you like cross those that we saw kind of a movement higher?
So China's production has been slowly falling, but it's very difficult because over the last several decades, 80% of the capacity has been built. and you don't invest billions to build these new iron ore,
To not run them?
to steel mills and not run them. So really, there's not so much that's obsolete that could arguably shut. So that's the challenge. But you have seen on the margin a bit come off the lower quality obsolete steel mills, but it's really tricky. And so China, instead, they can't consume it. They've been exporting, and you've seen increasingly over the last 18 months or so, Brazil, India, Vietnam, Turkey, all these countries that never stood up to China and put barriers on are kind of taking small steps. Right? The U.S. big step, 50% tariff. The EU big step between CBAM and Steel Action Plan in the middle of the year. These other countries kind of have to, or they're going to become the new dumping ground.
Are those tariffs here to stay? I mean, obviously, with this administration, they are.
So what we've been saying is that the longer that there is no steel taco, the more likely there is no steel taco. And I think that the fact is, on the steel side, it seems like you can defend the domestic industry is capable of supplying the market without much import. So it's defensible. Aluminum is tougher, though. Did
the story with steel change with U.S. Steel and Nippon Steel's agreement?
I think the bigger issue for steel is that there's been a flood of capacity. We called it Steel-mageddon a couple years ago, of new capacity coming to the market, right? And so that capacity now is sufficient. And the premise of Section 232 was to ensure that there was enough supply domestically for national security purposes. Mm-hmm. So the steel industry answered that call. Not because of the tariffs necessarily, but, it's here. The aluminum industry hasn't, but we don't have cheap electricity or bauxite alumina. It doesn't really make sense. So if anybody were to take a step back and evaluate the success of the tariffs, like the next president, perhaps, it would be harder to defend Section 232 for aluminum. But there's a new smelter that's pledged to construct, $5 billion worth of new capacity. If you pull the rug out from underneath them, that would be kind of unfair.
We're talking with Timna Tanners. She's Managing Director, Equity Research at Wells Fargo here at Bloomberg Invest. I feel like, though, these areas, and again, it's an interesting week because of what happened over the weekend, can tell us a lot about the global economy. What is the read-through off of what these markets are doing and what it does tell you about the global economy? Do you get some visibility, if you will?
I mean, if we're talking about demand, I think that the European...
Because all of this goes into construction and building, it can, but yeah.
So if we think about the key components of steel demand in particular, you're talking about construction and auto. And Europe has been, every year worse for the last 3 or 4 years. Yeah. Every year it seems like it can't get worse, and it does. And the auto market is in trouble because it's been allowing in Chinese EVs, and that's, destroyed, or hurt the European EV market or European auto market. Mm-hmm. And the U.S. auto market has been holding up a lot better than expected, a little steadier. The construction side is very leveraged to interest rates. Our channel checks in the U.S. do suggest that 2026 for steel demand should be a little better than last year, partly because last year was a pretty tough year, and a big component of that was uncertainty, right? Uncertainty around tariffs, uncertainty, et cetera. So now it seems like it's bouncing off of a bottom in the U.S., maybe Europe as well. China's... I don't know exactly if China is going to be stable and a little better, but certainly they've been lowering their growth forecasts.
Right.
Still growing, but less.
Okay. What changes your view on China? The demographic story is not changing.
Right. Yeah.
And the growth story isn't necessarily changing. But I don't know. I mean, the story has evolved a lot in the last 5 years.
Look, I think the copper demand story seems pretty solid, right? That's supported by electrification. That's necessary. If they're going to win the data center war, the electrification war, they're going to need a lot of build out of their grid, and that's really that's happening, right? So the copper demand story in China seems supportable. I think it just if you think about the evolution of that economy, they're exiting their iron age and they're moving into a more modern era where they just don't need as much steel. So I think it's still pretty supportive for copper and aluminum, but I think it's tougher to make a bull case for steel and therefore iron ore.
Timna, just got about 20 seconds. What are you watching in terms of what will impact these markets? Data points or anything, or is it geopolitical? Is it White House? All of the above.
Yeah, all of the above. But I'd say certainly demand, certainly how much individual countries and assets are affected are going to be critical as well.